Hello, beautiful people. It is your girl, Javicia, and I am back with another video. So I get this question a lot. How did I get ready to purchase my home? Because I really didn't talk about it at all. But by the time that I did, I was already in the process of purchasing it. You know, how did you do it so quickly? What did you do to make sure that you were ready? How did you get yourself together so that you would be able to purchase on your own? And so I decided this would be the perfect topic for me to talk about on a video. So that way, if and when people do ask, I can just point them to this resource so that they can get all the information that they need from my experience. So just to let you guys know, it's October 2021. I have officially been in my home a year as of August. So I am super excited about that. I'm very private, so most people didn't even know I was on this journey. But I did it, and I want to share with you guys, I want to say 8 tips. Is it 8? No, 9. I want to share with you guys 9 tips that I have that I've used in order to purchase my home very quickly. Within a year or less, I was able to make sure that I was not only ready, but that I got a good deal. If you're interested in this video, I want you to stay tuned and keep on watching. Oh, by the way, I definitely post content twice a week. So if you're interested in content like this, please hit the subscribe button because I'm bringing it to you hot, okay? Twice a week, you guys are getting content. I love it, and I'm hoping that I can build a community with you guys. So please stay tuned for more to come. So you want to buy a home, right? Everybody wants to buy a home. That's one thing that I think is on just about everybody's list, is just being able to say that you own a piece of property. I think the turning point for me was when I sat and calculated how much money I had given to this particular company by living in an apartment building or apartment complex for, I think it was 22 years. 22 years of my life I had been in one particular apartment complex. And I sat and for some reason, I was like, you know, how much money have they gotten out of me, out of my family? You know, I calculated it. I was disgusted. I'm not even going to share the number with you guys, but just know that it was a turning point for me. And I decided at that moment that I was going to get myself together and get ready to purchase my home. So the first thing that I did is I needed to figure out where I was financially. Yes, I knew how much money I made. Yes, I knew how much debt I had, but I did not know my exact credit score numbers. So what I suggest that you do when you first make the decision to buy a home is to see what you're working with. You want to go to all 3 credit bureaus, Experian, TransUnion, and Equifax. And you want to get your credit score. Now you can go to each one of these bureaus individually, or you can go to annualcreditreport.com and get all 3 in one place. So not many people realize this, but you are allowed to get 1 free credit report from each bureau once a year. And annualcreditreport.com allows you to do that very easily. So that's what I did. I went to the website, I pulled all 3 credit reports, and it shows me not only my number, but any outstanding debt that I have. It showed me my payment history, and I was able to really see what I was working with. Thankfully, I really wasn't far off from the goal that I wanted to have, but there were some things that I needed to do to clean it up. So checking between 6 and 12 months before you want to actually purchase the home is a great time period because it allows you to make any changes that you need to make. It allows you to dispute any charges that are on your credit report that you might not have necessarily done. It's just a great way to give yourself time to do what you need to do to get right, you know? At minimum, mortgage programs want you to have between a 580 and a 620, okay? I had a little bit above 620. I think I was at 660 at the time when I first checked my credit reports, but I wanted to get my credit score as high as possible because the better your score is, the better your rate down the line. So I cleaned up my credit report as best as I could in that 8 to 12 months period to make sure that I was a great candidate for a mortgage. By the way, y'all, when I say get your credit reports, I'm not talking about Credit Karma. Credit Karma is good in the moment. Yes, I use Credit Karma to see where I'm at you know, on a monthly basis, but it's not necessarily the most accurate. So you really want to see where you are on each one of those credit reports. So it's very important to not just go off of Credit Karma. You really need to go to these individual bureaus or the annual creditreport.com website and pull your credit report so that you can make the changes that are needed. So once you get your credit reports, the next thing you want to do is find your debt to income ratio. So you want to know how much money from your salary each month has to go to your debt. Lenders won't go any higher than 36 to 43% of your income. So if a majority of your income has to go to bills, then you really need to figure out a way to either make more money or bring those bills down so that your debt to income ratio is a lot lower. Okay, so that's what I did. I took an inventory of what my bills were. I had my car that I was still paying on at the time. That was my major bill. So what I did was I had my car and I had 3 or 4 little accounts, like they were like health bills and things like that. I made a plan. So bi-weekly, every time I got paid, I paid on those little accounts, but then I also made my regular monthly payment on my car. Then I paid additional on the principal so that I could get that car paid off more quickly. So within that 8 to 12 months, I was able to clear up those 3 smaller accounts. Plus I paid off my car so that my income to debt ratio down. And I'm pretty proud to say this, when I was going through the process of buying my home, the lender made a comment about the fact that I really did not have any debt in my debt to income ratio. So it was really, really low. The only thing that I had at that point was my student loans, and those things gonna be here for a while. Okay. My goal is to pay them off, but baby, I'm gonna be paying on that. Oh wow. Anyway, they made positive comments about the fact that I had paid off everything else. So it made me a good candidate to purchase a home because I didn't have any other major bills. You know, I had my car insurance and my phone bills, but those aren't included in your debt to income ratio. So I was a really good candidate, which made my interest rate really low because I only had my student loan payment on paper coming out of my income on a monthly basis. The next thing you want to do, and you can be doing that in conjunction with 1 and 2, is save your money. Okay, depending on the type of loan, you could be paying between 3 and 5% of the total value of your home. If you're getting a conventional loan, your down payment could be anywhere between 3 and 5%. FHA loan, it's 3.5%. So that sounds like a little number, right? But if you're getting a $200,000 house, you're spending at least 6 to 10 stacks on just the down payment. That's not including closing costs. That's not including inspection fees. That's not including any of that other stuff. I'm just talking about the down payment. So you really want to make sure that you have them points right, okay, before you start talking about buying a home. You can't wait until it's time to buy a home to start getting that money together, and unless you got it like that. But keep in mind that these lenders are going to want to know where that money's coming from. They're going to want to get bank statements. They're going to want to see and track where that money's coming from. So it can't just come out of thin air. You want to make sure that you are taking the time to save, and it's a paper trail where they can see that you've been saving over a period of time with your down payment. Next thing I want to mention is, and this is a mistake that a lot of people make, is that they think that all they need to save is for their down payment. Not true. Okay, learned that the hard way. Thankfully, I had some money stashed on the side just for rainy day. I made sure I didn't touch those funds for my down payment, so all of the additional funds that I needed to come up with came out of that, and I was good. But keep in mind that down payment is only the beginning. You're gonna have to have closing costs. You're gonna have to pay for an inspector. You're gonna have to do things to your house prior to you moving in. You might want to have a mover move you in. You need to think about some of these fees that are gonna come out of your pocket prior to move-in day, because those need to be added to your overall savings goal. Okay, personally, and this is being a little transparent, After I made my down payment, I still ended up coming out of pocket about $5,000 before moving day. And then once moving day happened, I ended up wanting to buy different things for my home to make it more comfortable for me and to customize it into the home that I have now. So your girl spent a pretty penny, okay? And I always make the joke that a house bill is a gift that keeps on giving, because it seems like I keep having big bills that have to come out of my pocket for this house outside of the mortgage, okay? Like, ended up saving money for my roof. Now I'm saving up for new hurricane-proof windows. Then I'm gonna be saving up for the next thing. Like, and these aren't, one thing about a house that's different from an apartment is anytime something breaks or anytime something needs to be fixed on, it's not like a $20, $30 bill. It's usually $500, $1,000. I'm getting stressed. I think I have PTSD. Because y'all, I really didn't realize like how much money was going to be coming out of my pocket after purchasing the home. So please make sure that your funds are right, not just with the down payment, but make sure that you have discretionary funds after the fact. 4, figure out what you truly can afford. Don't lie to yourself, sis. Figure out what is going to be feasible for you. Know that you are not going to want to spend all of your money on bills on a month-to-month basis. That was very big for me. I love to travel. I love to go out to eat. I love to buy nice things. So I wanted to make sure whatever I decided was going to be my max for my mortgage, it still left room for me to enjoy life. I didn't want to be focused on paying bills month to month. That's just not what I wanted. So make sure that you really take a look at your income, your other bills, and see what you can truly afford, and then work from there and decide on what type of house or home that you can actually buy. Number 5, I want you to make sure that you really research loan programs, okay? I mentioned conventional loans and FHA loans. Those are not the only loans out there. The way for you to really research, obviously, is to use the internet, but then also you can find a mortgage lender that you trust to really give you the lowdown on interest rates and down payments and things like that that come along with the different loan programs that are offered. There might be some that you might qualify for that I don't qualify for, especially if you're in the military or if you're a vet. They definitely have mortgage programs that I obviously wouldn't qualify for, but make sure that you really do your research and figure out what is going to be the best loan for you, and then that way it'll kind of tell you how much money you need to come up with on a down payment. Also, when you're looking for a mortgage lender, don't just pick the first one you look at. Find one that can be trusted, because this is your money that you're talking about, okay? You don't want to play with that. You could end up getting a loan that screws you over, where you end up having to go bankrupt because you can't pay it, or you have to sell your home. So really make sure that you take the time to find a mortgage lender that you trust. The next step that you want to do is get pre-approved, okay? When I went through that pre-approval process, I felt like I was signing my name over in blood, okay? They asked for everything. I told you guys a little bit earlier that they really want to see where your money is coming from. I meant just that, okay? Every bank account I had to give them at least 3 months of bank statements. Now, I might talk about this in another video, but I do have different bank accounts for different purposes. I have a particular bank account that I use for my travel funds. I have a particular bank account that I use to pay my bills. I have a particular bank account that I use for savings, one that I don't have a debit card for so that I can't touch the money. I have a bank account that you get what I'm saying? So I had to provide bank statements for at least 3 months for each of those accounts. A lot of time that it's going to take for you to get this information together. Also, you're going to have to give your tax forms, your W-2s, your pay stubs. They're also going to do a credit check. Their goal is to really dig and see who you are as an individual, how much money you have, so that they can make a decision on what you can be pre-approved for. They're basically telling you, if you meet all of the other requirements for the loan, you should be able to get a house or a home at this amount. okay? But also keep in mind that a pre-approval does not mean a guaranteed home buy, okay? So the mortgage lender is going to give you a pre-approval. Let's just say they do all of the research on you. You provide all the information to them. They go through it and they decide, okay, you know what? We're going to pre-approve you for a $200,000 house. You go and find this house and you're ready to get this mortgage loan, okay? It's not up to the mortgage lender to make or the underwriter to make that decision for you. They still have to shop around your contract to a mortgage lender, and they have to make the decision on whether or not to provide the loan for you. So just keep that in mind, that yes, it's a pre-approval, but it's not set in stone until it's set in stone, okay? I will be honest with you guys, even with me being diligent and crossing my T's and dotting my I's along the way, I still had a hiccup after the fact. Once I paid my earnest money and we were ready to go, I had a hiccup for like 2 or 3 weeks where I was sweating bullets just waiting for the mortgage company to approve my loan. So please keep that in mind, that pre-approval is not guaranteed. Next, you want to find a trusted real estate agent, okay? This is going to be the person that shows you around and really helps you find the home of your dreams. So you want to make sure that you can trust this person. You are going to be spending a lot of time with this real estate agent. So make sure it's somebody that you like. Thankfully, I had a friend who recommended a real estate agent to me, and it was a match made in heaven. I really love her as a real estate agent. She helped my brother find a home after me. So definitely somebody that I trusted and made the experience worthwhile. So make sure you do your research and find somebody that can make the experience better and not worse. Next, you want to find a reputable inspector. This is really important because this person is going to be inspecting the home that you are interested in buying. They are going to look at this home from top to bottom and let you know what is wrong with the home and what is going to have to come out of your pocket if the seller is not willing to fix it. So for the home that I have now, when I tell you he was thorough, okay, and there was 4 or 5 things on the list that I went back to the seller and said, if you want me to buy this home, you need to fix this prior to move-in. And they, for the most part, fixed most of it. Some of it we split in half in the closing costs. But you really just want to make sure that you understand what you're getting into. But the only way you can understand it is if somebody's honest with you and tells you, hey, this home has problems, or hey, this home is ready to go, there's nothing to worry about. 9 times out of 10, there's going to be something wrong with the home if the home is not brand new, period. So make sure that you can trust the inspector that's doing the research on your home for you. Last but not least, be prepared to pay earnest money, okay? And earnest money means time that you make an offer or present an offer to a seller, you're going to have to provide a check of earnest money. It's usually 1% to 2% of the purchase price, but it's no less than $500 to $1,000. That's the minimum I've ever seen. So you want to make sure that if you have a substantial down payment ready to go, that some of it is liquid cash, because you're going to have to write a check when you put in that that offer for the home. So some people didn't realize that. Some people have their money tied up in 401ks and such, and it's hard for them to get access to it. But when you put that offer in, you have to have that check ready to go. Otherwise, it's not something that the seller will look at. They want to know that you are serious about buying, and money talks. Now, this check, this earnest check, isn't going directly to the buyer. It's going to sit in an account. If the seller decides to sell the home to you, then that money goes towards your down payment. So keep that in mind, okay? That money is just not out there in the universe. It is going towards your down payment. I think that's it. I feel like I talked a lot, but I think that's it. Those are the tips that I have for you guys. If you have any questions, please leave them down in the comment section below. I will make sure to answer each and every one of you. The process is long. I'm not gonna lie to you, but as long as you do your due diligence and you make sure you're prepared, then it makes the journey a little less cumbersome. It makes it easier to get through. So that's my advice for you guys. So if you like this video, please know that I post videos at least twice a week. If you're interested in seeing more content from me, make sure you hit that subscribe button, because I will be bringing more and more content each and every week. I am trying to build a community here with you guys, so please stay tuned for more. I'm looking forward to welcoming you into the family. Okay? I hope you guys have a great rest of your day. Bye.